Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. India's Monetary Policy Committee is likely to keep interest rates unchanged in today's policy. All of the 36 economists polled by Bloomberg expect a status quo. The death toll from the coronavirus outbreak has risen to 565, with the total confirmed cases crossing 28,000. Avenue Supermarts looks to raise 4,000 crore rupees through an through a QIP issue that opened on Wednesday. The company is issuing shares at a floor price of 1,999 rupees. Sun Pharma is likely to report a subdued quarter as a rising competitive intensity is likely to impact the drug maker's operating performance. And Eicher Motors and Hero MotoCorp are the other two nifty majors that will be reporting their third quarter numbers today. Let's talk about the US markets now. Wall Street extended its winning run for the third straight day, led by positive macro data in the US, and the Dow Jones and the S&P 500 logged in gains of over 1%, while the Nasdaq, despite underperforming, ended at a record high. Benchmark indices are now up nearly 4% for the week. Ranita Young of Bloomberg News wraps up the trading action in the U.S. on Wall Street in this report.
U.S. stocks rallied for a third straight day to record highs. The S&P 500 topped 3% higher, all as investors speculate that efforts will succeed at minimizing the economic impact of the deadly coronavirus. During the session, we saw Tesla falling sharply after the last few days higher. Earnings continued with Coty's second quarter better than most feared and actually meeting analyst estimates. And Boot Barn's fourth quarter earnings per share view missed analyst estimates. Some of the next earnings reports to come will include FireEye and MetLife. Meanwhile, the U.S. dollar was higher as U.S. firms added more jobs than expected in January. And WTI saw its first gain in about 6 sessions. And gold was slightly higher during much of the day. That's a look at your Wall Street action on Wednesday. In New York, I'm Ranita Young for Bloomberg News.
On to the latest from the coronavirus. The World Health Organization has warned that there is yet no confirmed treatment of the deadly virus as the death toll climbs past the 560 mark. Widespread disinfection and containment efforts are now underway across the world. Selina Wang and Yvonne Man of Bloomberg News get you the latest in this report.
Chinese researchers have applied for this national patent on an experimental Gilead Sciences drug. Now, this drug isn't licensed or approved anywhere else in the world, but it is being rushed into trials in China based on some early evidence that it's highly effective, and it may go into clinical trials in China as early as next week. But it's important to remember here that even though investors are bullish, it typically takes years to research and develop a novel medicine for any disease, and a viral illness poses particular challenges. You also have the World Health Organization warning against any expectations of an imminent breakthrough, saying that there are no proven or effective therapies yet. The World Health Organization is also pressing countries to share more information on cases, saying that there is right now a shortage of details that has hampered efforts to contain this outbreak. Now, the most severe cases are still in Hubei province, where 97% of the deaths are occurring and where 67% of the patients are. The healthcare system in that region has been overwhelmed by the virus, which potentially is leading to significant underdiagnosis of patients. But there are some efforts to alleviate that right now, with Chinese medical technology group BGI saying it has opened a lab that can test 10,000 samples a day.
All right. In the meantime, Yvonne, you're in Hong Kong, where we're seeing increased measures. This, of course, after the chief executive, Carrie Lam, came under some criticism. Some people saying that she hadn't done enough.
Right, and we saw this ramp up in travel restrictions. Now, all mainland travelers arriving here in Hong Kong will be quarantined for 14 days, still falling short from what medical workers are striking about, which is a full closure of the borders with China. But Carrie Lam reiterated that that would just be not practical given the tight links between the city and the mainland. And this, as we see 3 new cases here in Hong Kong, bringing that total now to 21. Iran and Taiwan, the latest to add restrictions to travelers from Hong Kong and Macau. Anyone arriving from those two cities will be also quarantined for 2 weeks. And you talk about the fear of the shortage of face masks. We're seeing that sort of panic buying now in toilet paper, this run on toilet paper, where you see people on social media speculating that perhaps there could be some holdups in supply chains from China. So people are just rushing in line to get some tissues. Just goes to show where the panic is right now. And Cathay Pacific also asking 27,000, all of its employees, to go on unpaid leave for 3 weeks, starting from March to the end of June. The CEO saying the situation is as bad as what we saw back in 2009.
Now, U.S. President Donald Trump's impeachment trial ended on Wednesday, that is yesterday, with acquittal on both the charges. The outcome was largely anticipated given the Republicans' control over the Senate. Jordan Fabian of Bloomberg News has more details.
Republican Senator Mitt Romney of Utah, the former 2012 Republican presidential nominee, surprised many at the White House by voting to convict the president of abuse of power. The White House was hoping to have a bipartisan vote on acquittal, but it turned out they did have a bipartisan vote, but it was to convict the president. Of course, the Senate did not reach the two-thirds threshold needed, but this deprives the president of a talking point he desperately wanted to have heading into his reelection campaign later this year, that the Senate, on a bipartisan basis, acquitted him. He'll now have to make another argument to the American people about how this all went down.
Jordan, has the impeachment process swayed independent voters?
I think there's some mixed messages on that, Taylor. If you look at a Gallup poll that just came out this week, it shows the president's approval rating is at its highest point at 49%. Independent voters have helped drive the president's numbers up, but it's not clear if it's due to the strong economy or a backlash against impeachment. And how this all plays out in the coming weeks, with the president messaging this vote for his reelection campaign and the Democratic candidates talking about it, will have a lot to do with how independent voters end up viewing this 5-month-long saga.
All right, let's see what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
The impeachment. President Trump here in the U.S. has faced impeachment day, in other words, formal charges, and defeated them. The Senate cleared him of abuse of power and of obstructing Congress in a result that was widely expected given the Republicans' control of the chamber. Former presidential candidate Mitt Romney voted to convict Trump on the abuse of power charge, becoming the lone Republican to break ranks and vote with the Democrats. Meanwhile, 3 people are now known to have died and 179 were injured when a passenger plane skidded off the runway in Istanbul. The Pegasus Airlines Boeing 737 broke into 3 pieces as it landed in wet weather, and that forced passengers to scramble through gaps in the fuselage to escape. The rear of the jet caught fire while the nose came to rest upside down. To Indonesia now, the country expanded at its weakest pace in 4 years, its economy, in 2019, and that's opening the door for more rate cuts amid the fallout from the coronavirus. GDP rose a fraction over 5% last year, broadly in line with the Bloomberg survey, although fourth quarter growth was the slowest since late 2016 and below the median forecast. Bank Indonesia has cut rates 4 times since July, but has kept things on hold as of last month. And finally, Bernie Madoff has asked for early release from his 150-year prison sentence, claiming he has just 18 months left to live. The 81-year-old has served 10 years so far after being convicted of defrauding investors of more than $19 billion in the biggest ever Ponzi scheme in U.S. history. Madoff says he suffers from terminal kidney failure and other ailments, including heart disease. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
In the top thing to watch out for today, it's the first Monetary Policy Committee decision after the union budget that was presented on Saturday. The 6-member panel will no doubt have deliberated on the government's move to use the escape clause in the FRBM Act and, of course, slowing economic growth. But what might weigh more on their decision is retail inflation moving above the 6% mark. Pallavi Nahata sums up why all the economists polled by Bloomberg expect the MPC to maintain a status quo today.
India's Monetary Policy Committee is widely expected to keep interest rates unchanged on Thursday. The committee had cut interest rates by 135 basis points in 2019 and then took a pause in December. While that pause was termed temporary, all economists expect the committee to stay on hold this time as well. 36 economists polled by Bloomberg all expect the repo rate to remain unchanged at 5.15%. While the policy is coming right after the budget, it will be the inflation picture which will seal the case for a status quo. Inflation has risen to above the 6% upper limit set by the committee. While most of this is driven by the 12.16% rise in food, inflation pressures are visible beyond just the vegetables category. So the committee may choose to wait and watch before it cuts rates again. Remember, the committee does not need to act on the current inflation rate, but forecast a future inflation. As such, the outlook for inflation 12 months from now is all important. Growth will remain a discussion point as well. While growth remains weak, there have been no adverse information flowing in between December and the February policy reviews. If anything, certain data points such as the PMI have reflected some level of stability. At 56.3, PMI for January is the highest in nearly 7 years. Now, typically, the monetary policy review after the budget is focused on the fiscal scenario. This time, while the headline deficit does suggest consolidation, there are enough concerns about the government's ability to meet targets for tax and non-tax revenue items like disinvestments. We don't expect to hear too much on the fiscal situation since Governor Shaktikanta Das has so far been fairly restrained in his commentary on the fiscal situation. However, we do hope to hear from him on whether the government's decision to invoke the escape clause will push the RBI to buy bonds. We also expect to hear the RBI's view on large borrowings from the National Small Savings Fund. Finally, what the bond markets are waiting to hear is the RBI's rationale behind Operation Twist. Remember, between the December and the February policies, the RBI initiated a program to buy long-term bonds and sell short-term bonds. The idea was to flatten the yield curve, which partly worked, but how long will the RBI continue with this? How often are they willing to intervene in the markets using Operation Twist? Bond traders will be looking for clues on those questions. Do log on to BloombergQuint on Thursday for the full monetary policy coverage.
All right, so Jahangir Aziz is the odd one out from among 4 economists. The head of emerging market economics at JP Morgan believes that the RBI has room to cut rates by as much as 50 basis points in 2020. Others, like Prachi Mishra of Goldman Sachs, currency and bond expert Anant Narayan, and of course Kaushik Das of Deutsche Bank, say that the MPC has little choice but to stay put on rates. Here's what they had to say.
We now expect at the minimum another 50 basis points of rate cut in 2021, and I would argue that the risk is more cuts than less cuts. Here is a budget that was presented, 3 weeks after news of the biggest shock that we are encountering in 2020, which is the coronavirus. This is going to have, or already is having, a significant impact in the region's growth and in global growth, at least in the first quarter. Chinese cities that have been closed down for already a week, in 10 days actually, February 9th, the first 9 days of February, represent about 80% of China's IP, and there is probably cause to believe that some of that might, in some of the cities, that restriction might even be extended. So I think we should brace ourselves for a 1Q global growth number that is, could be very surprisingly low. I'm not saying that there isn't going to be a recovery in the second quarter or in the third quarter and that we will not go back to where we were, but the major risk facing the world right now is an actual disinflationary, and on top of that another slowdown in growth. This could well prompt the Fed, and we already have that 25 basis points rate cut, the Fed to cut even more, and global disinflation to become even more aggressive. So my point is that, if you look at the global environment, and even in India, you just take away headline inflation, food inflation, and you're down to core, and core is at its lowest we've seen in many years. So my sense is that I know that, a headline number of 7.5% of inflation doesn't look, the optics are not right to do a rate cut. But, once that headline inflation rolls over, which is likely to roll over, I think the space for cutting rates is significant.
So overall, I think I would think due to all these three factors, inflation inching up, maybe a little bit more comfort on growth, and the role of other policies to complement, I think it seems a status quo would be more likely. They might change the stance from being accommodative to neutral.
Really?
Because
that'll shock the market.
I'm not sure if it'll shock the markets, because generally I think rates have been going up, right? And rates have been going up in the swap markets because with inflation going up, and again some comfort on growth as well. So I think it just opens, it opens the possibility of, if just in case, if the uncertainty around inflation gets more magnified, it gives you a window where you can, operate the other way. I do think the bar for raising rates is very high at this point relative to another cut.
Governor Das is in a bind as well. Inflation is way too high for him to cut interest rates at this point in time. But he has made it very clear that he wants to support the market, support the government, support the fiscal spend to the extent possible. Last year, inflation was low. The external context was absolutely benign, and therefore India could effectively afford to print and spend, and that's what it's been doing for the last 2-3 years. Those degrees of freedom are coming down. Inflation is on the higher side at this point in time. External sector is still benign, but you never know. Too much of this print and spend extended for too long, and you are risking financial stability. I'd much rather we went into actual, structural reform to address the core issues than keep playing around with Excel spreadsheets and hoping to print and spend our way out of trouble.
No, fair point. Kaushik, one quick word on monetary policy. Would you also expect a continued pause?
We are in the midst of a credit market which is not functioning properly. There's no question of allowing interest rates to move up. But as I told you, the fiscal side of the story is such that it will have a natural tendency to push interest rates higher. And small savings interest rates will not come down because the government wants money. So the best that you can hope is RBI maintains the accommodative stance. I hope RBI doesn't change that to neutral, because that would kind of indicate that RBI is giving one possibility that at some point of time RBI can consider hiking rates. That could be damaging for the market. So at this point of time, you maintain accommodative monetary stance till you get to a point where you can consider whether you can cut interest rates or not, given the global growth could again slow down because of the virus in China. So we need to wait for that. At this point of time, wait and watch. I think from an RBI point of view, they'll get a lot of comfort that government has shown a 3.5% number for next year and wanting to bring it down to 3.1 in the next 2 years. So RBI probably will take that as a source of comfort and maintain the monetary policy stance as accommodative.
All right, now let's turn attention to trade setup, and Agam Vakil is here to tell you all about that and also to tell you what's happening in the futures and options space. Agam, another day of gains yesterday, strong gains for the benchmarks. How are we looking at the start today?
It's wait and watch, because the Nifty, SGX Nifty is indicating a negative opening right now, which is down 0.2%. But yesterday was a good day of trade with the indices advancing, and strength was seen in the mid-cap and the small-cap indices too. We saw the banking indices also gain 1% gains for the Nifty banking futures. For now, the ADRs are also looking at an up move of anywhere between 8% for Tata Motors. Actually saw a lot of strength coming in there, and Vedanta is also the other one which is advancing by around 3%. 1%. We have gains in Wipro. Not too much to speak for otherwise. Of course, Dr. Reddy is declining by around 3%. In terms of the fund flows yesterday, we have FIs which bought into Indian equities for the second straight day. So that, of course, is a positive. DI is also buying into Indian equities to the tune of around 263 odd crores. And coming down to contributors, we had HDFC Reliance and HDFC Bank along with ICICI Bank were giving some sort of support to the indices going in. What about futures and options? Have we seen the longs unwinding, or rather the short covering? Well, stop, not yet. We're still looking at about a short covering. This time, the open interest has declined even further for the Nifty futures, and the Bank Nifty futures also looking at an increase in open interest towards fresh longs. When it comes to range, we're still looking at a 500-point range between 12,000 and 12,500. And in terms of change in open interest, we saw a lot of writing around the puts, but specifically in this case, the 12,000 put. It's coming down to your wicks. That also cooled off further at around 14.2. The Nifty put call ratio also edging up higher at around 1.38 versus 1.24. And in terms of stocks, we are watching out for something like a Hero MotoCorp, which is going to announce its earnings today, but it was weak ahead of its earnings. But Cholamandalam Finance, Tata Chemicals, and SRF seeing fresh longs. In terms of stocks which are seeing unwinding, Torrent Pharma, TVS Motor Company, and Titan looking at decline in open interest. Let's wait and watch, Alex. Of course, we're seeing a lot of strength in Asian markets. We're going to have to see whether or not that trickles down for Indian markets too.
Thanks so much for that, Agam. All right, on to stocks that you have to watch out for and trade today. Somit Sarkar has joined me to tell you all about the stocks in news. Morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with the earnings that came in yesterday post-market. Firstly, HPCL, now compared to last quarter, actually compared to the analyst estimates, the results were way below what they were estimating, though the revenues were up 16%. The company's net profit and EBITDA was down nearly 29% and 20% compared to the last quarter. The gross refining margin number came in way below analyst estimates at around $1.79 per barrel. Now, the crude throughput was down 9%, while the sales volume were up 18% compared to last quarter. Now, lower refining and marketing margins is what hurt company's third quarter numbers. Secondly, Gujarat Gas, now the results were in line with analyst estimates. Now revenue was flat and EBITDA was flat compared to last quarter, but the net profit was down 62% because in the base quarter there was a tax reversal which had aided the net profit number. Now on the volume side, the morbid demand continues to drive the volumes, and the analysts believe that the volume was a miss in the industrial and the commercial segment, but the commercial PNG, domestic PNG and CNG were better than what the analysts were expecting. Cadila Healthcare, the results were above estimates. Revenue were up 2%, EBITDA was down 17.5%, net profit was down 27%. Now margins were impacted because of higher employee and other expenses, despite the fact that the raw material prices were lower in the third quarter. Now better than expected sales were seen in the US and the API segment, while higher volumes and contribution from new products did aid the US business of the company. Ajanta Pharma, the results were above estimates. Revenues were up 34%, net profit increased by 61%, while EBITDA was higher by nearly 73% compared to last year. Margins were impacted by higher other expenses and employee cost. On the segment-wise, if you see, India sales were up 12%, while the exports were up 47% compared to last year. Divi's Lab results were in line with analyst estimates. Revenues were up 2.7%, net profit was down 8%, and EBITDA declined by nearly 7% compared to last year. Now, if you see, the CCS business was flat, which impacted the revenues, but the generic and the carotenoids business was up 7% and 15% compared to last year. The gross margins of the company expanded as company partly commissioned its new intermediaries facility. And Pratap Snacks, lastly on the result funds, revenues were up 17%, net profit declined by 32%, while EBITDA was down only 2% compared to last year. Higher employee cost and rise in palm oil prices impacted the margins of the company. In other stocks to watch, firstly Avenue Supermarts, because the company is looking to raise close to 4,000 crore rupees via QIP, in which it will be issuing nearly 2 crore shares, which will lead to an equity dilution of only 3.1% on the expanded equity base. SBI, because they have completed the divestment of its entire 7.14% stake in Equifax Credit's information services for nearly 68 crore rupees. VSC Tillers, because they have come out with the January sales number. The power tiller sales were up 1% to close to 1,971 units, while the tractor sales were down 7% to close to 516 units. And lastly, ITI, because they have withdrawn their FPO issues after extending for 2 times times, and after revising the price band also 2 times due to prevailing market conditions. That's what the company said in the release.
All right, thanks so much for that, Soumit. Another stock that you have to watch out for is Sun Pharma, and competitive pressures in the US portfolio is likely to impact Sun Pharma's earnings, which it reports today. The drug maker's margins may also be impacted owing to higher R&D spends. Darshan Mehta is joining me to take you through all the key numbers there. Darshan already looked at what the moves are likely to be, what the key trends are likely to be. What are the key numbers?
Yeah, so good morning. So Tyre already came out with numbers which was weak. Probably that will have an impact. So we are seeing a 10% top line growth. We are seeing a 16% bottom line growth and a dip in by 20% on the EBITDA front. So that's something that we're looking at it. Tyre already came out with their third quarter numbers, which was rather weak, and that will have an impact. Now, overall for the domestic formulation business, we are seeing close to an 11% top line growth on a year-on-year basis. US formulation will be slightly weak at a 5% degrowth that could come in. Emerging markets will be weak. Rest of the world market will be strong. A 40% growth is something that we are seeing, and the API business will be up 6%. Now we are seeing that close to $220 to $230 million of revenues will come in ex Tyre for the US business, but there is significant amount of competitive pressures that is there. Apart from it, the scale up has not happened in some of the products. The investments are there, so US probably will be under a little bit of pressure. The launch of couple of drugs will see that, you know, on a sequential basis, yes, numbers on the US side will see a growth of around 3%. Now, Pola Pharma was incorporated and acquired by Sun Pharma, and because of that acquisition, the rest of the world revenue is seen up almost 40%. The specialty business, and when we are talking about a drop in the EBITDA, it's because of investment that's gone in on the specialty business, and that is why, you know, the EBITDA probably will be there. Increase in R&D spends to make up for the specialty business, that also will probably impact the EBITDA. And the depreciation and amortization rise will also rise because of the specialty business, and that will have an impact on the bottom line of the company.
All right, thanks so much for that, Darshan. On to the auto sector, where the Auto Expo is currently taking place in Delhi. Tata Motors expects a structural revival in the auto sector during the second half of this year. Speaking to Nishant Sharma, MD and CEO Gunter Butschek, said that he expects the prices of electric vehicles to come down and that customers will take a while to accept the new reality. Listen in.
Pricing is expected to go down because we expect that the cell price is going to reduce, while we expect that the range is going to increase, not because we put more capacity in, which would make it more expensive, because we expect higher power density of the cells, so that you can actually get for the same watt hours more output, because of a shift in the chemistry and the technology of the cells. And the way we have designed our Ciptron technology, you might recall we said it's all modular, that's all standardized, and it's all flexible as far as leveraging at the advancement of technology is concerned in the space of the cells.
Because everyone is at the level playing field as far as the EV story is concerned. Everyone has just started, right? So you would want to have a higher market share, higher adoption in terms of the customer's mindset as far as the EV is concerned, right?
I'm not quite sure if we are really on a level playing field, because if you take the currently available electric solutions in the Indian market, there are not that many which could claim that they are Indian-owned product, as it is the Nexon EV, or as it is going to be the Altroz EV with a high degree of local content. There are other solutions available in the market which are fully imported, completely knocked down, as it is formally called in our industry, and where just the assembly is performed on ground in India. What we have seen in the union budget, call it a tax penalty of higher import duties for the import of these kind of components, that makes it for the ones who have built the electrification journey on CKD, it's going to make it more expensive. It's most probably and expected to drive localization. We have the advantage that we're already ahead of localization is concerned, and if we leverage the Tata universe, so that means the strategic approach of the Tata Group with 7 participating Tata Group companies to take care of infrastructure, the requirements of the phased manufacturing plan, all the way to the cell with the strong commitment of Tata Chemicals, building of the infrastructure in a dedicated way in certain cities in order to boost and to accelerate the adoption. I think we are well set, not only from a product, but also from an ecosystem point of view, to really lead the movement to electrification by providing the required infrastructure.
The auto industry is currently witnessing one of its worst slowdowns ever, and it hasn't spared the auto ancillaries either, those like tire companies. So how have companies like JK Tyre managed to tide over the slowdown? Here's a conversation that Nishant had with the company's chairman and managing director, Raghupati Singhania.
At JK Tyre, we had evolved a strategy some months back, and we are working on that, which is primarily putting a great trust in the replacement market, which has a relatively better situation than the OEM markets. And as a matter of fact, in the last quarter itself, we've been able to improve our volumes by 13% in the replacement market. Apart from that, you might be aware that JK Tyre is being exported to 100 countries across 6 continents, and we have renewed our thrust there. And as a matter of fact, in the last 9 months, we have increased our exports by 45%. So in fact, that twin strategy is the one which we are pursuing, which is helping us to somewhat combat this difficult market.
Are you seeing the demand coming back now?
Very slowly, very slowly. Yes, it is, but very slowly.
What are the factors that do you think are ailing right now? We saw pick up the good festive season from the industry, and do you also worry that with the BS6 transformation, whatever that uptick you've seen might also fizzle out?
You see, the BS6 factor is going to be short-lived, another couple of months, and then it's out. But the real thing is the lack of consumer financing, on one hand, which is affecting both the housing sector as well as the auto sector in particular. Because as you might know that in commercial vehicles in particular, consumer financing was a big deal. Right. And with the NBFCs gone under and difficulty, let's put it, is impacted quite severely. On the other hand, the per se, please appreciate that if there are not enough goods to be carried, where will the commercial sector fly? So in fact, that is very much related with the general health of the economy. So that is the second point. So I think both these factors will gradually come about and take care of the future.
Right. And you're also looking to deploy a lot of tech in the tires as well. Talk to me about that. What are you doing? How are you doing it?
Well, we have, and in fact, this morning we have launched what we call a smart tire, and which is a tire which monitors the pressure, temperature, and behavior itself and conveys to the driver on the dashboard. And that results in a better fuel saving, better mileage, and better upkeep of the product.
All right, there you have it. Do watch out for the Monetary Policy Committee's decision that will come out around noon. So you can find all the updates right here on BloombergQuint. Thanks so much for watching. This has been All You Need to Know.